But, guys, let's get to the news this morning. So much of it. I want to start, Jim, with Archegos, actually.
Yes, I'm glad you are.
It's a story that I've followed so closely, or at least tried to. Of course, the week that it really hit, I was away. But, we're starting to see even more. Credit Suisse, of course, has been at the center of it. It was originally a $4.7 billion loss. Last week, you may recall, when after the close, I was reporting on those discovery trades that we didn't think. We thought they were done. Well, they weren't done. And then one of the key questions was, well, are they losing even more money? And the answer is, yeah, they are. Almost another $700 million. Of course, they've already dismissed any number of people who were associated with trying to judge risk there and clearly failed to do so. But you're also looking at a stock price that has just dropped down dramatically. And, it raises another question. Stock comp, my understanding is, from people close to the company, comes tomorrow. In other words, you know what your bonus is, but you're actually getting delivered the stock tomorrow. Well, that's not good. I mean, 2 months ago when you learned how much you were going to get, or 3 months, it was a lot higher. And by the way, investment bank, well, they perform quite well. M&A, capital markets, they've done very well in SPACs. So those people are also being penalized, and/or, Jim, and you know this, of course, having worked on Wall Street for many years, they're looking around, because the question for CS becomes, how, not just because of the stock price fall, and therefore they're not getting nearly as much as they thought they were, but how do we incent them? How do we pay them more this year when we've already lost, $5.5 billion?
They wiped out how many years of investment banking earnings?
Yeah.
Also, David, I'm surprised you're not more pejorative.
Okay.
Frankly, because this is one where every day we think it's over. Midnight capital raise?
Yeah.
I mean, that's shit. I mean, honestly.
This is another reason why there's pressure on the stock. CNBC Europe did speak to Credit Suisse's CEO. We should take a listen to what he had to say about the quarter.
The loss we had in Archegos was unacceptable, and we had to take actions in terms of management changes. We are reducing our exposure in this business. We are reviewing our risk controls and systems in that area. We reduced our exposures to the underlying positions now by over 97%. We had to take another roughly $600 million loss in the second quarter, but at the same time, we have taken action also on the capital side. We have raised almost $2 billion through 2 series of mandatory convertibles. And we have now an implied CET1 ratio of 13%. If you take all the measures into account that happened since the 1st of April.
Yeah. All right. Well, meanwhile, they didn't even have the systems in place to accurately understand exactly what was at risk in the moment, the way clearly their competitors were able to. It's somewhat shocking that was not the case, Jim.
Yeah. Carl, I have to tell you, I don't think that man that we just saw had any idea that this was going on in this bank.
Yeah. Yeah.
That's unbelievable.
Carl, it is important to note Archegos was incredibly profitable for many of these prime brokers. I mean, there's one, and I won't name the name, but because I haven't confirmed it fully. But let's just say I'm pretty confident that in one quarter they earned $140 million in fees.
From what account?
Yes.
What red flag? That's the biggest red flag I've ever heard.
Obviously, the leverage that he was taking at Archegos.
Oh,
but that can give you a sense as to the allure here of why Archegos was such an important client, or why they would do business with $140 million for one of these prime brokerage. Just one in a quarter. Now, of course, at the end, they lost more than they made, and he had those relationships so many different places. But fascinating story involving Credit Suisse. How will they keep their people in this environment? And then, of course, the larger, also, there's always that question of, does the Swiss government ever say, hey, you know what, maybe you and UBS would make a good combination?
Right. This guy he's not Malaysia, Archegos, but this is staggering. And I don't know how anyone keeps their job.
Anyone?
Anyone.
Yeah.
There's a board.
There is. And
Carl,
and then obviously, by the way, I don't know if you saw, Discovery and Viacom had good days yesterday.
I was going to say Viacom.
They may have bottomed.
Yeah, well, I said that
I
said that, and then immediately on Twitter, people just say, "Are you kidding?" No. But Carl, the one thing that is certain is that there's always another shoe to fall in this thing, and I don't know whether we're done. I don't know whether we're done.
I think we're there.
No, with other firms.
Oh, I see. Listen, I mean, you got Morgan Stanley, Goldman Sachs, Credit Suisse, UBS. I think he had Wells Fargo. He had some Nomura. I mean, and by the way, there's other firms. He had at least 7 or 8 relationships with prime. What he was doing, Carl, was shocking, somewhat irrational, and yet it seems to have worked for him in the past because he had an enormous family office.
Did anyone have a vaccine against him?
Well,
J.P. Morgan and Moderna.
J.P. Morgan. Yeah.
Shepard Smith here. Thanks for watching CNBC on YouTube.